Getting pre-approved for a mortgage can feel really intimidating, and it's probably the most daunting part of buying a house. It doesn't have to be that way, and I think some of the stress stems from not really knowing what to expect or how to set yourself up for success. So today I want to share 5 steps that you should take if you're applying for a mortgage. Let's help you get the best rate, the best possible deal, and let's reduce some of the stress of buying a house. Let's get started. Hey there, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area and I specialize in Solano County. I help buyers and sellers accomplish their real estate dreams. And if you're out of my area, I'd be happy to help you interview and find the perfect realtor for you. The very first thing I would do before going to get pre-approved is to pull your own credit report. It's so important for you to know where this number is going to fall. And unfortunately, you can't rely on consumer sites such as Credit Karma because they use a different model than lenders do. Lenders use a FICO score. You can go to annualcreditreport.com and get a free credit report. In fact, you can get up to 3 credit reports every year. It's the only authorized and official source for you to get these reports from the 3 major credit reporting agencies. This is going to be a great opportunity to review that report and look for any discrepancies or items that need to be fixed because that could be dragging down your credit score. It's also going to be a reality check. If your credit is lower than what you hope for or what's going to get you the best rate, you can start to address and find ways to boost that score more quickly. For example, you might be able to be added as an authorized user to somebody's credit card. Now you want to make sure that they're in great standing, that they don't have any derogatory marks, because of course, if they have bad credit, it's going to impact your credit score. If you get added to somebody who has great credit, long-standing history, on-time payments, that could potentially boost your credit. The next thing I would do is take a look at your debt and see if there's anywhere you can trim that down. Did you know that if you reduce your monthly debt by $70, you could potentially boost your purchasing power by about $10,000? That's major. So taking a look at potentially frivolous things. Are there streaming services that are boosting your minimum monthly payment on a credit card? If that's something that you could eliminate, you could definitely increase your purchasing power. Now, not all debt is created equally, so before you make any major payments, I would definitely talk to a lender. It might be more advantageous for you to have that cash readily available than making a large payment. So starting with the smaller, more manageable items, and just keep in mind you're going to have cash for that down payment and reserves for closing costs. The next step, or really step to avoid, and this is until you close on a house, do not open any new lines of credit and absolutely do not co-sign for somebody else's loan. If you open new lines of credit, it's actually going to reduce your credit age and that could lower your score. And if you co-sign for somebody's loan, you are in fact liable for that payment. Even if you have an agreement with that individual that you are not going to be making any of those monthly payments, a lender's going to see it otherwise because legally on paper, if you co-sign, you would be required to make that payment if your cosigner defaults. And that loan will count as debt against your debt to income ratio, so it could lower your purchasing power and could impact your interest rate. Next, I would take the money you have saved for your down payment and your closing costs, and I would put them in a high yield savings account, especially if you know it's going to be some time, maybe 6 months to a year before you're going to be ready to buy. You might as well earn interest, which is free money on those funds that would otherwise be sitting in your checking account where you're earning no interest, or a standard bank savings account, which might earn you 0.01 or 0.02%, which is essentially no money. High yield savings accounts right now can yield up to 4% a year in interest. So let's say you have $50,000 saved, you know it's going to be about a year before you're ready to buy. Keeping that money in high yield savings could earn you up to $2,000 of free money within that year. That's an extra $166 a month that you get just for leaving that money there. It's really a no-brainer. The only thing I would suggest is make sure you understand how long it's going to take to access that money. It could be that you could wire funds directly out of that high yield savings to escrow, for example, or sometimes you may have to wire it to your checking account and then from your checking account to the escrow company. This is, of course, if and when you find that house, but it's important to know that lead time so that you can write that into the contract and you can set appropriate expectations. The final step, go ahead and take the leap and get pre-approved. It is a necessary part of buying a house, so you might as well rip off the Band-Aid and see where you stand. What's the worst that could happen? If somebody gives you a no, it's not a reflection of you not being good enough. It simply means there are some goals that you need to set to get to a yes, and at least you'd have a clear path on how to do so. And while you are talking to a lender, I'd recommend having conversations with 2 or 3 and get pre-approved by more than one, because lenders have different loan products, they have different interest rates they're going to be offering, possibly even lender incentives. We want to make sure that we get you the best possible deal. Don't worry about your credit being pulled. You do want to confine your search within a 2-week period or so that credit pull, even if 2 or 3 lenders are pulling it, is only going to count as one and it's not going to reduce your score. Reach out to me if you have additional questions on how to get pre-approved in Solano County, or if you live outside the county, feel free to reach out if you'd like some assistance in finding an incredible realtor.